Let's get right to it. A high-stakes battle is brewing in the Bitcoin order book, and millions are on the line. The data is practically screaming that extreme volatility is just around the corner. Right now, over $52 million in liquidation leverage has piled into the market. That is a massive amount of capital sitting on a knife's edge, dangerously concentrated. And this all peaked just a few hours ago, creating what is essentially a powder keg of leverage. Seriously, this is the perfect setup for a massive, violent price swing. What this really means is that millions of dollars could be completely wiped out in an instant. The market is at a tipping point, and one wrong move could be absolutely catastrophic for one side of this trade. But here's the thing, the data is showing this huge contradiction. You've got massive bets on a surge, and at the same time, massive bets on a drop. The tension is incredible. We're going to unpack exactly where those pressure points are, and we'll even show you one outlier signal the rest of the market seems to be ignoring. If you find this kind of deep dive valuable, drop a like and share this explain. Okay, let's dive into the numbers, starting with the biggest, most immediate threat on the board right now. The single largest pool of money, the main character in this story, is sitting right around that $90,000 support level. These are all long positions, traders betting heavily that the price will not fall below this mark. Now just look at the sheer density of this bright yellow band on the chart. This is what we call a liquidation cascade waiting to happen. If the price even dips below this level, it's going to trigger a chain reaction of forced selling, which then pushes the price down even further and faster. If you want to stay ahead of moves like this, make sure you subscribe to the YouTube channel. But here's the thing, it is not a one-sided story at all. Let's flip the script and look at the opposing force, which is what's creating this incredible pressure cooker environment. Just above where we're trading now, a pretty significant volume of short positions has gathered. These are traders betting on a price drop from the $92,000 level. And, well, they are in a direct standoff with all those longs we just looked at. And this is exactly where the trap is set. This huge pool of shorts, it's like fuel for a fire. If the price starts to tick up, these traders will be forced to buy back their positions just to cut their losses. And that buying pressure pushes the price up even faster. That's what we call a short squeeze. And would you look at how fast this all happened? On the left, that's the liquidity map at midnight. On the right, just 8 hours later. This situation is evolving incredibly quickly, and we'll be posting real-time updates as it unfolds, so be sure to follow us on Twitter for more updates. Okay, so now let's look past the obvious conflict zones. It's time to hunt for some anomalies. Any sign of where the so-called smart money might be placing their bets. So the critical question becomes, with all eyes glued to that $90,000 to $92,000 range, what is everyone else missing? The heat map gives it away. There's a smaller but very distinct and growing pocket of leverage much higher up, right near the $94,000 resistance level. This is that outlier we mentioned at the start. Now, this isn't just random market noise. This suggests that a smaller, maybe more strategic group is positioning for a major breakout to the upside. So if we do see a short squeeze get going, that 94K level is the next big target. If you're getting value from this analysis, helping us out with a like and a share would be huge. So let's put it all together. The most important part is synthesizing all this data into actionable levels that you need to be watching. All right, let's break it down into the key battlegrounds. The immediate conflict zone is right between $90,000 and $92,000. A break below $89,500 could trigger that liquidation cascade we talked about. But a break above $92,000, and we could be looking at a squeeze right up to that $94,000 outlier. These are the critical levels to keep on your radar. And to stay on top of these kinds of market-moving events, you really want to be subscribed. So what we have here is a market that is perfectly balanced for chaos. Tens of millions are locked on both sides of this trade, and a structure like this is simply unsustainable. A massive leverage-fueled move is coming. The only question is, who gets liquidated first? Subscribe and drop a like below, follow us on X for more updates, see you in the next one.